Yeah. So I'm thrilled to introduce our next speaker for this knowledge series, which is enabling you to help build on account aggregator framework. So we have Bob, a highly esteemed faculty member at Cambridge Judge Business School. Bob brings deep expertise in regulatory innovation and digitization of financial system, having co-founded the Cambridge Center for Alternate Finance, which has become a global leader in researching and financial technologies and alternative finance. And in addition to his groundbreaking work in academia, Bob actively advises national government and international organizations on regulatory innovation. His work focuses on applying AI to regulatory framework, driving innovation that helps financial system adapt to the rapidly evolving digital landscape. Today, he will share his insights on some exciting development in this space. Bob will deep dive into practical use case for RegTech and SupTech applications, showcasing the immense potential of regulatory data in refining AI models through contextual augmentation. Bob will discuss how rule engines and smart contract can be integrated into cross-border transactions, especially in the context of digital assets, further enhancing the transparency and speed and security of global financial system. So please join in welcoming Bob to this stage. So over to you, Bob. We are really excited hearing you and getting a lot to know about
Great.
what is happening here. Yeah.
Thanks very much. Okay, well, hello, everyone. I'm going to share a deck that I'm going to use to walk through. And I'm going to bring that up. And I'm certainly going to have to increase that to presentation mode. So if you just give me 1 second to be able to do that, I'm just going to get it on the center of my screen. And then I go to presentation mode, and that should be pretty good. I'm going to go back here, and that's my title slide. Okay, so today I'm going to talk to you about RegTech and SupTech. And I'm going to talk about it with a different lens than you probably, for those of you that know something about RegTech and SupTech, this will be a different lens on those topics. For those of you that don't know a lot about it, I'm going to start by explaining very simply what RegTech and SupTech are. But I'm not going to spend a lot of time on that because I think it's important to kind of dive into what's driving the need for it. What dependencies are there? There's a lot of friction in the development of RegTech and SupTech in that market. I'll talk a little bit about why, because overcoming that friction is, if you want to move into this business, either you want to adopt it or you want to build tools, you need to understand the frictions to adoption. Otherwise, you're going to have a stillborn startup, frankly. So scalability, replicability, these are key things that if you're building a business, you're building tools, you really need to think hard about. And there are some challenges in the RegTech and SupTech space that are what I call frictions to innovation, frictions to this adoption. And the adoption of these technologies is a driver of innovation, both in financial supervisors and in regulated firms. We're going to talk a little bit about that. Then I'm going to talk about the importance of the data layer. Let's talk regulatory data. I'm going to spend a lot of time talking about regulatory data and its relevance to large language model training, fine-tuning, RAG, and something called contextual augmentation. That's really important because when you start to think about output from prompts, the accuracy of that in the legal and regulatory space is very, very important. So the bar is very high. These aren't LLMs that give you options for travel itineraries. They're often decision augmentation on things that have regulatory impact, and that's our high stakes. And then finally, I'll talk about the relevance to how the financial system's transforming. Why are these developments so critical for the implementation of next generation financial market infrastructure, which is really critical, particularly for digital assets? So with that, I'm going to kick off. Okay, so just briefly to set the stage by defining RegTech and SupTech, I think what's important to understand here that these terms are often used interchangeably, in part because they're really two sides of the same coin. So what do I mean by that? So one way to sort of define RegTech is it's really technology used by industry, by the financial industry, to manage regulatory monitoring, reporting, and compliance. Okay? Simple, simple, simple. So that could be anything from, AML, that could be reporting on derivatives transactions. It's a very, very, very broad market spectrum. And so much can fall into the RegTech space, but when you boil it all down, that's kind of an encapsulating definition. SupTech, it's really similar, right? It's also the technology adopted, but this time with the players on the other side of the table, financial supervisors and regulatory agencies. Their job is to supervise and monitor the financial system. So what do I mean by two sides of the same coin? Well, if you're a RegTech firm and the applications, the use case space and the kind of the pain point set you're addressing, it involves the complexity of regulatory reporting. Regulatory reporting is a nightmare for regulated firms because often different regulatory agencies in different countries, but actually the same type of agency, let's assume a securities regulator that wants reporting on some particular transaction in securities, bond issuance, whatever it might be, is demanding data to be reported on transactional data reporting, which is in a format that regulatory agency can ingest and easily analyze, right? So there'll be a data format around that specification of how things should be reported. And for example, it could be, transaction volume to one decimal place. And a similar agency supervising the same activity in another country could want it to that same data reported to 3 decimal places. So the notion of standards, for example, in regulatory reporting is a real challenge for regulated firms. RegTech can help address some of the challenges around the change and the divergence in formats, even for simple reporting of transactional data. Now, if we flip to the supervisor side that's collecting all this data, many of them, like the Bank of England and the FCA in the UK, have regulatory reporting initiatives where they're trying for their own purposes to standardize the form in which they ingest regulatory data because they need to analyze it. So they want it in a highly standardized format, and they don't want different firms reporting with different standards. They want all firms to report, let's say, to 1 decimal place or 2 decimal places or 3 decimal places. And so one of the challenges is this divergence in reporting standards, and technology is being used essentially on the supervisor side for data collection. You think about that, right? To standardize that, make that simpler, move that into workflow systems for supervision and analysis. The regulated firm is using technology to simplify its reporting of the same data. And this is a key theme, right? You need to think about RegTech and SupTech as two sides of the same coin. And actually, there's a huge opportunity for regulators and industry to work together collaboratively to define the standards around the technology, around data formats that they're both using. And if each side is using different standards and formats involving technology implementation, the composability, you will have no interoperability. You will have no composability that goes across the whole system. And this has a big implication I'll get to at the end of my presentation of how the whole system has to work together. Because right now it's a little bit balkanized. So I hope I'm making it clear. RegTech technology adopted by the financial industry for managing their obligations, monitoring, reporting, and compliance. SupTech, similar technologies used for the supervision and monitoring, the ingestion of all of that reporting data from regulated firms, okay? Now, what underpins some of the RegTech and SupTech, I described earlier, friction in adoption. There's a real challenge, I think, in the RegTech and the SupTech market regarding scalability, regarding replicability. A part of that problem is that if you look at regulated firms, take 2 large globally systemic banks, right? They have the same regulatory obligations. They're operating across multiple jurisdictions. They have a lot of similarities, but their compliance workflow processes, their reporting processes, if you look at the workflow and the steps and the stages, and how they ingest regulatory information, obligations at the front end that they know they need to respond to, how they map that to their controls and processes and systems for managing their regulatory obligations, for managing their risk, okay? And then for how to maintain that given this changing state of obligations, and then being able to do impact assessment. How well are our controls in place for specific activities we undertake, mapping and meeting the regulatory obligations that we have, or do we have regulatory risk exposure because it's not mapping well to what our obligations are? Something's out of sync. If you look at that whole activity, essentially, those workflow processes are not exactly the same in two very similar institutions, because these internal processes have tended to grow organically. They've tended to be defined by the vendors selected by each of these firms. Each of these firms would have very large IT budgets internally that would develop different workflow processes. So now imagine you're a vendor of a RegTech solution and you want to sell it into one of these banks. And let's imagine, very long procurement and selling cycle, by the way, easily, in my opinion, well, depending on the size of the banks, but you can spend a couple of years. The procurement is incredibly complex. And so let's imagine you crack one of the big banks. Great. Well, you're going to have a long period of integration of your solution. And then you think, well, now I've kind of made it. Now I can take that out to the other systemically important banks. You know, there's 30 or 35 of them around the world. Those are the really, really big guys. Because if I've sold to one, I should be able to sell to the rest. You go to the next one, and their systems, their processes, their workflows are not the same as the first one. So you have a whole other integration challenge. You may need to adapt your product or your application, your solution. So replicability and scalability, that is key to a startup business. Venture capital investors will look for, they'll be testing and really looking to drill down on scalability and replicability, because they want to put money to work that scales a business quickly, doesn't scale a business slowly. So if you think about this scaling challenge on the RegTech side, that's a challenge for raising venture capital money, right? On the SupTech side, it's a small market. The reality is, if you think about there's a bespoke nature of workflow on the regulated firm side. It's very bespoke on the supervisor side. They have less resources. They've all done something different. Many of them are still working with spreadsheet-based solutions. It's a bit of a mess. Now, one of the other key layers to this that I think feeds into the friction of adoption, one that can be addressed, that would actually help grease the wheels, if you will, is around standardization of data. One of the biggest problems in the SupTech and RegTech market is that today the regulatory obligations, the rule books, if you will, that publish the obligations that the firms are subject to, are published in machine or in human readable form. So go down to the bottom of this chart, 2024. We are today in a human readable regulation world. It's published as text that humans read, largely in the form of PDF documents on websites, okay? Now, we're in a state of migration in the market towards machine-readable regulation. I'll explain exactly what that is in a minute with a tangible example. But that's really, really, really important. It's really, really important because regulatory complexity today, the digitization of workflows, all kinds of developments in terms of the digitization of the economy mean that human-intensive processes aren't fit for purpose anymore. They can't keep up. They can't manage the risks, mapping to the control frameworks, mapping to the processes. What's the state of the regulations, particularly with multi-jurisdictional businesses? And supervisors have the same problem. They're drowning in data flows. So as long as you're trying to work and develop policy, and we'll talk about that in a minute, on the regulator side, using humans only, and often Excel spreadsheets, maybe, and on the regulated side, you're trying to run processes and systems that you're trying to undertake digital transformation, but you're using human readable PDFs. This doesn't map. right? The form factor of regulation today in human readable form is not fit for purpose in a digital economy. And so there's a need to translate the form factor being PDFs, human readable PDFs, to regulatory data that can be machine readable, machine consumable, and ultimately machine executable. And that's what I've got in this stack here, showing you my estimation of the timeframes we're going to see the implementation of the change of the form factor of regulatory data. And now I'm going to talk about how important that is in driving RegTech and SupTech. So first, what do I mean by machine readable data, right? What I have here is an example. This is a regulatory document that's been ingested in a document process that has converted the PDFs into text, into JSON files, and then hundreds of machine learning models have been trained to recognize, essentially to identify and classify sequences of text in that document. So this is an example of a metadata field here, the title of the document, the language of the document, the published date, the publisher, the document type. Node level metadata means somewhere in that document, there's actually regulatory obligation expressed. Which page is it? Specifically that you could reference to look at, instead of reading a whole document to find out where the customer due diligence relevant obligation is in a 600-page regulatory PDF document, okay? And it's this metadata that you see on the right, this translation of some of the attributes of this particular document translated into code that can then be read by the machine. That's what I mean by machine readable. And there's other types of data that are less. What I just showed you is what we call descriptive metadata. It describes some of the contents of the document, like label, like publisher, etc. But this metadata is very valuable, called inferential metadata. So if we take a look at the relevancy score, for example, that first item on that line, it would score that document using clustering techniques, right, to identify which type of regulation does this refer to? How is it associated with other documents that are similarly published within that regulatory theme? So you can begin to do clustering and define relationships. Obviously, you know, vectors and graphs heavily involved in this kind of analysis. Versioning, very valuable. The document itself doesn't say whether it's the 5th document in a sequence of 8 documents published about anti-money laundering and customer due diligence in Malaysia. But versioning would identify that because it would have a sense of what the other 7 documents are in the series and could identify that this is the 6th one. This is really important because if I'm running a firm and a regulated firm, I need to know which version of the regulatory document obligations are my controls based on. Because if they're based on version 6, and there's now a version 8 published, I'm behind the curve and I've got regulatory risk. If that supervisor walks in and sees that my controls aren't mapping to the current version, I'm in big trouble. I'm going to get fined. So this legislative initiative, how is regulation propagating? Who's following who? Which jurisdictions, which country follow which regulations, what pace? And topic relevancy, which is, again, is this someone relevant to someone involved in AML, customer due diligence? Is this so roles, responsibilities, being able to filter down the fire hose of all this regulatory information flowing into a regulated firm, to be able to stream out and identify what's relevant to who based on their function and role in the business is extremely valuable, okay? You can't do any of this with PDF documents, okay? And so I'd say there's 3 drivers for this changing form of regulatory human readable information into data, into machine readable data. First, regulatory change management. It's increasingly complex. The pace of regulatory change is accelerating. So existing regulation is changing faster and faster, and new areas of regulation are coming in. We didn't have cyber regulation 10 years ago or 15 years ago. We didn't have AI ethics regulation 3 years ago. We didn't have GPDR and data protection regulation 8 years ago. We've got all of it now. And a lot of this is what we call extraterritorial. So when the European Union introduces GDPR data protection, if you're a large business and you're doing any business in the EU, you have to comply with GDPR, which means you can't run separate systems. So you're probably having to deal with GDPR compliance or regulatory obligations and structure your business and workflow processes, your controls to satisfy GDPR everywhere you do business. This is enormously complex with overlapping jurisdictions, all having extraterritorial influence in the regulations and standards that they're imposing. Second, firms are digitizing their workflow. There's a digital transformation going on across the firm to make things more efficient, more accurate. Now, I mean, across the business. Operational workflows, right? Compliance reporting, they're just one set of operational workflows. And so the regulatory data that you need for those workflows also has to be able to plug and play into other workflows and other systems. Regulatory data is needed in many areas across the firm. Think of legal. Legal is often quite separate from compliance, but they work with regulatory data. So why should the lawyers be working with different PDFs because of a human readable thing? There's a lot of duplication going on. If you can create a data form that enables interoperable use of the same regulatory data within your organization, you're moving away from having different sorts of data that's been concocted or constructed by application providers or by yourself internally in the firm that really can't scale across the processes and systems within your business. And finally, next generation market infrastructure, as I referred to earlier, super important. We're moving to a world of atomic compliance. And once you have atomic compliance, which means you're settling transactions, there's atomic clearing and settlement, sub-second clearance of a transaction between two counterparties. But if you want that to be a compliant transaction, you have to be able to have the regulatory compliance function perform at the same speed, which I call atomic compliance. Because if you want compliant atomic settlement, you can't have it without atomic compliance, right? So that enables embedded supervision, because now we're back to the two sides of the coin. If you have data structures that rules engines and smart contracts are executing, then that enables regulators to have visibility on the same data with the same data structures. They're in the flow of the data. That's very important. That would be a major step change for regulators. That would, I think, increase the efficiency of the whole regulatory system. So now I'm going to get a bit more. This just talks about kind of, I won't spend much time on this, but suffice to say that the regulators themselves moving to create machine-readable rule books, in other words, move away from PDFs to create machine-readable content, is super slow. You have less than 10 regulatory authorities today really pursuing machine-readable rule books, because the vast majority of supervisors do not have the financial resources or the technology expertise to make that transition. That means you're going to need intermediaries that do this, that take the form factor that regulators are publishing in the PDFs, as I mentioned, and creating a form factor that's needed by RegTech and supervisory SupTech firms, because they're the applications that use this kind of data that the firms then install to make their systems more efficient. That intermediary role in transforming the form factor of data, in my view, has to be a third party. Regulators themselves at scale are not going to do it themselves. Let's take a look at an example of that. Now, I'm going to start off by talking about this example, which has emerged out of a project that I founded in the university probably 6 years ago now, 5 years ago maybe, called the Regulatory Genome Project. The impetus was realizing that there was no global repository of machine-readable regulatory information, and that there were different initiatives going on. Some application providers were beginning to convert some for their own use of their own application in the RegTech space. Some supervisors were beginning to create some machine-readable parts of their rulebook for their own internal use to try and improve supervision. I'll talk about that in a minute. But none of it was joined up, and none of it was global in scale. And we realized that if all these initiatives use different data standards, use different data structures, you're going to have a Tower of Babel. Nothing is going to be talking to anything. If customer due diligence, the representation of that in a data form is different in jurisdiction A than jurisdiction B, and you're the regulated firm, how do you use those two different data types? Now you have to start mapping and you have to start to a common thing. It's a mess. So we began to promote the idea of an open standard for the representation of regulatory obligations as data, okay? And so what we did was we created this initiative in the university to partner with regulators and created a spin-out company called RegGenome. This is why you see the logo of RegGenome, that actually does the data processing itself. And we had to create RegGenome as a separate company because it's a $20 to $50 million problem to actually run that document processing to create all that metadata that I showed you earlier. There's no way you could raise enough research money in the university or any philanthropic funder to fund the building and the ongoing maintenance and operation of a huge repository like this, of regulatory data. It had to be privately funded. It had to be created as a spin-out. The university owns a big part of that company. And then we partnered the spin-out company with the university to create the Regulatory Genome Project. And so we partner with regulators, particularly standard-setting bodies. And here I've got a selection of them at the top that define the standards and principles of which the regulatory frameworks, say in India or in the UK, the regulations contained in those frameworks should reflect the principles that the standard-setting body for that particular, representing that particular regulatory authority have defined. So I'm going to show you a very concrete example of something that we've done with IOSCO. And IOSCO is the International Association of Securities Commissions. So that's the SEC in the United States, that's the FCA in the UK. So 120 countries, the securities regulators of each country are the members. They meet in committees and they define what the principles should be for different areas of regulation that should be then reflected in the rule books of all the members at national level. So in this case, right, IOSCO, the members of IOSCO wanted a more efficient way of comparing the regulatory frameworks, the obligations they have in those frameworks, to the principles set out by IOSCO. So how aligned are they? Because they should be quite aligned. And also comparing those obligations against other regulators. You know, maybe India wants to understand how stringent its customer due diligence obligations are on a regulated firm for a given activity versus Malaysia or versus Saudi Arabia or versus Singapore. Well, there's no efficient way to do that today. So IOSCO and the university partnered to create a taxonomy structure. Okay, I'm not going to read all the text here about the program, but let's just say, I'm going to come back to the milestones maybe in a minute. Yeah. So first thing it did was it created a taxonomy. It created a taxonomy for collective investment schemes. This is the area of regulation, which is fund management, basically, okay? And so although IOSCO has a set of principles, I think the principles are probably here, yes. You can see there are principle 24, 25, 26, 27, and 28, right? All related to fund management. For governance and conduct, rules and assets, disclosure for suitability, valuation, and then hedge funds. So there should be a set of regulations at the national level for anyone running funds that reflect these principles, and then the firms that are subject to those regulations are authorized for those activities in a jurisdiction follow the regulations. Those regulations are derived from these principles. So you can create a taxonomy, and you're seeing it here, how it breaks down, right? Principle 24 has, in these areas, this is the first layer of a taxonomy, level 1. Blue would be level 2. Gray would be level 3. I'll make this clearer in just a minute of how it actually manifests itself in an application. Because once you have built the taxonomy, you can now train machine learning models to classify the text in all of the documents published by all of those regulatory authorities to identify which is a conflict of interest, which is a customer due diligence obligation reference, and begin to compare. So what we did was we took a standard off-the-shelf tool, the equivalent of Power BI. This happens to be Amazon's QuickSight tool. This is just a sample. I'm showing you screenshots, right? For collective investment schemes, this is 2,600 documents across 10 jurisdictions, 5 document types. You can see in the bottom lower left that there are policy documents, rules and regulations, forms, laws, and enforcement and supervision actions. And then all of that enables the comparative analysis. I'm obviously not going to show you a live demo. What I am going to show you is the left column. You can see those standards that I referred to earlier. I showed you those principles. And we're looking here at principle 24, for example. Around principle 24, and that taxonomy, that first layer is what we call the general tag. Those are families of regulatory obligations that fit and map to the principle. And then the specific tag would be individual regulatory obligations that fit into each family, which fits into each principle. And then to the right, you're seeing about 8 or 9 countries here: Australia, Bermuda, the British Virgin Islands, I think, Caymans, European Union, international, blah, 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 because I can't see because I'm covered up on my screen slightly. Saudi and Singapore. Now, this is interesting because this is the frequency of the classification tag count across all the relevant documents in a jurisdiction for a specific obligation. So if I'm in the European Union or I'm Singapore and I want to compare my collective investment scheme management company, that's the top specific tag, the regulations around that with the EU, understand how are they expressing those obligations versus how am I expressing those obligations in my rule book. I can actually go in using this tool. If I was demoing it to you, I could click on the European Union. Because of the machine readability relevancy score, it pulls up the 26 documents, or actually the documents with the 26 tag references. And I could actually then click on the document itself and the pages in the document. It will take me directly to the page expressing the regulatory obligation so I can read the language and compare it, read and scroll up in the document, see the page before and this page after, so I have the context for the obligation expressed on the page that's referenced in this chart. Okay? This is very powerful. So this, by virtue, so this would be a SupTech tool, right? Simple SupTech application in what is an emerging part of SupTech called policy tech. What are the tools that help me write regulatory policy, analyze regulatory policy in a more sophisticated way, leveraging technology than I can using human-intensive processes in Excel spreadsheets? This is a great example of a simple policy tech SupTech tool, okay? And IOSCO's thrilled with this. And it's now rolling out to the IOSCO countries. Now, imagine that you are, you're a fund manager and someone comes in, a RegTech vendor comes in with a solution to do something to do with your fund management, regulatory obligations, managing regulatory change, whatever it is. And you ask the question, well, tell me about your regulatory data. How did you structure it? What's the origin of the structures? And you say, well, it's based on the principles and standards set out by IOSCO and co-developed with IOSCO and all of the regulators that have the rule books that publish the regulations that you are subject to use the same data and the same data structures. You like that if you're the fund manager because you're aligned with what the regulatory community is using itself. And that's what I mean. You have to bring together the two sides of the table, RegTech on one side, SupTech on the other side, but using common data models, using common structures, so that you're not talking apples and oranges, so that when the reporting happens, you're reporting in a format that the regulator actually is using as its own structure. So bringing together the public and the private side of this, SupTech, RegTech, is really important for reducing those frictions and increasing the replicability and scalability of both SupTech and RegTech businesses. That's one of the key points I want to make, okay? Now, I'm going to give you a use case very quickly on the RegTech side, which involves LLMs, right? There's a really important growth and development of LLM use in RegTech. And I think the bottom line here is businesses really need to understand the challenge around regulatory change. I mentioned the complexity of that, the difficulty with that, and maintaining a current accurate state of controls that reflect the regulatory obligations the firm is subject to at any given point in time for that activity in a jurisdiction. Machine learning models themselves have limits in terms of being able to manage the accuracy of that mapping to controls. So people are, there's a lot of experimentation and starting deployment using large language models to analyze the controls, policies, processes in the firm, and trained on regulatory data, regulatory information, so that when there's a change in regulatory documentation, that ability of LLMs to do a comparative analysis is really, really valuable. But the challenge becomes the accuracy of that analysis, right? And there's different ways of fine-tuning a model to increase that accuracy, right? Fine-tuning in RAG, I won't go into this because you're all probably somewhat familiar with it. But I want to give you some examples of the outcome if you actually fine-tune a model using the metadata that I showed you earlier, and that underpins the application of SupTech, the IOSCO application that I showed you. If you train the model so it's referencing the metadata instead of the underlying regulatory document text, the accuracy and performance of that model, the output of that model in prompt response is much better. This is some simple examples, right? So if we take the suspicious activity report, very common in AML, we take this is an untransformed, this is Use Patriot Act. If you were just to feed that document to the model, asking the prompt, who is subject to the obligation to file a suspicious activity report, you get back what you get on the left, right? It uses 60 tokens. As we know, 60 tokens is a collection of words, and the number of tokens is a proxy for the cost of compute use in order to what it takes to generate that response. That's the energy challenge of LLMs, right? Is that so compute intensive? So what you're getting back here is an answer, but you're not getting the detail and a lot of the relevance and importance of what you need to know in the obligation. It lacks the detail needed. On the right, we've fed it with the annotated, which is essentially the metadata, right? So look at the token use first. If you were to read through this response, you would see it's much more detailed, okay? And look at the token use. 4,000 tokens instead of 60,000 tokens, right? Using less than 10% of the tokens, right? That's really, really important because essentially, if you think about the metadata, it's gone through a document pre-processing to produce the metadata so that the model effectively shortcuts to the metadata, and it references various pieces of metadata relevant to the prompt instead of having to sift through the underlying regulatory domain text. Hugely more efficient, right? And so, of course, that can be replicated across repeated uses. This is just highlights some of the differences where the detail sits. And then question 2, based on that information, now you get into more complexity, right? What types of transactions and counterparts explicitly mentioned are requiring enhanced due diligence, right? And again, what you begin to see is not only detail, but inaccuracy. I'll just point out, for example, the first bullet point on the left mentions section 312 and page 304, 305, right? That's the first section highlighted in gold or yellow on the left. Match it over to the right here, and what you'll see in number 1 is it's not referencing section 312, page 304. It's mentioning the accurate answer is page 34 and 35. So the model on the underlying domain text missed. So it's one thing, missed and introduced inaccuracy. As I mentioned at the top of this, if the bar for accuracy in legal and regulatory output of LLM models is very high because the consequence and cost of an error is very high. So again, the value of the metadata, and again, you can see the differences in the highlight and the inaccuracies. So in broad terms, you can see on average, after many, many, many experiments, the tokens used by referencing the metadata or fine-tuning with the metadata instead of the underlying domain-specific documentation is about 5%. I won't take you through what all these numbers are in terms of millions of tokens, but we've done a lot of analysis on the impact of token use and accuracy. I won't go, this is again, fine-tuning, another example, but the bottom line is this, right? 80 to 95% savings on token costs, response time or latency, right? Less than half. PDF's the typical response time. This is using, by the way, very, I think it's Llama 3, pretty advanced model. This is very recent stuff we've done. 26.6 seconds versus 66 seconds with filtered JSONs. So you get basically significant better accuracy, half the latency, and 89% token saving. There's a great paper recently, I think 3 weeks ago, published or post by Anthropic on contextual retrieval. This is broadly very aligned and consistent in their lab experimentation and results by using pre-processed data along the lines of what we've done here with the metadata. Hang on, I'm just looking at something. Okay, good. I'm going to be moving on here. But the Anthropic paper is very, very good that reinforces the conclusion of using I'm going to close here in the next 2 or 3 minutes with a quick comment about programmable money, right? Because I think a lot of you are involved with smart contracts, possibly, or interested in digital assets. Just the key here, we're talking about a space called programmable money, right? That's the key to the digital asset world. It's the programmability. But you need digital rules. Again, human readable stuff won't work. I referred earlier to the notion of atomic compliance, right? There are a number of projects going on. Project Agora, a lot of these are with the Bank for International Settlements. I know India is involved with several of them. We've been involved with Project Mandala, which is encoding regulatory requirements into a protocol for cross-border payments. Again, moving from machine-readable metadata into actually the extracted obligations, very narrow specific text, not a page, and then encoding that and creating libraries that a rules engine can reference. So if you're making a payment from Malaysia to South Korea, you can reference the current state of the regulatory obligations associated with the characteristics of that transaction and either greenlight it or not based upon whether the obligations are satisfied by the characteristics of the transaction. And so the notion of embedded supervision, again, two sides of the same coin. As soon as you get to machine executable rules, embedded supervision, where the supervisor is in the flow of the transaction, capturing that data, getting time-stamped, validated, visible flows of data, that's key, suddenly gives that supervisor a window on what's happening in transaction flows in virtual real time. And without getting into the details of this, you could think, a compliance by design ecosystem for the next generation might look somewhat like this. If we start with the regulators on the top left, they're publishing rules, you can see in the far left, in whatever form. I mentioned industry and RegTechs are establishing, right, some intermediating function. You take a look at that star, you take a look at building structured regulatory content. That's what I've just described to you. That feeds into a computational regulatory database. Some regulators will publish digital rules. Those will go directly into the computational regulatory database. That provides the basis for the state of the rules at any given point in time relevant to any transaction. So then you've got rule sets associated with types of transactions. And then you've got the individual firms feeding in the characteristics of that transaction. And so you're matching up the state of the rules with the state of the world according to the rule sets. And you either greenlight it or you don't. So you end up with two types of data flows: a compliance data flow feeding into the supervisor world, and obviously accessible also by the counterparties, and a transaction data flow that everyone can. So you've got these parallel flows of transaction data and compliance data. And arguably, there's a new type of player that will emerge running this financial infrastructure. Like you have financial market infrastructure players today, you're going to have them in the future. What they do and how they do it will be a little bit different. But we see that intermediating role of those MIOs, right, as being quite critical in how those data flows are then fed back to participants. So you end up with this virtual circle of all of this data going back in to feed how policies develop and how supervision is done, how compliance is undertaken. And that brings everything full circle. Okay, so with that, and trying to stay within my time frame, I think one issue to close the slide, there's no standards today on the use of content published by the regulator. I won't go into this in detail, but suffice to say, some jurisdictions are open data. As a RegTech firm or SupTech firm or an intermediary involved with the data like RegGenome, you can access and use the data published by a regulator, publicly available for whatever you want. Others, completely restricted. Others have no policy whatsoever. So in a world of LLMs, where everyone's trying to train models, where everyone's trying to develop standards, where everyone's trying to work with regulatory data, get away from PDFs, if there's no clear content policies by the regulatory authorities themselves, that's a big friction. And that's one that could be easily overcome. So with that, I'm going to conclude. Thank you very much for your time. I was probably 3 or 4 minutes over my allotment, but I don't think that's too bad.
So amazing insight, Robert, from your side. So we have one question which one of our participants has asked. If you can just have a look at on the chat, just to the left, where you.
Okay, in the regulator business, it seems that trust is of utmost importance. Correct. Gaining trust requires years of effort and money. Yes, to build the systems. What opportunities lie for small startups with 3 to 4 member teams to solve for much less complex and manageable part of the RegTech SupTech problem to get their feet on the ground? What areas can be explored in this regard? Good question. Yeah, trust is vital, and it's super hard for a RegTech or a SupTech to get their feet on the ground. So first of all, I think, I think procurement, I think it is more difficult today for a startup RegTech to crack and actually do business, get through procurement of any sizable financial services firm versus 2 years ago. It's harder. It's harder because, generally speaking, firms are trying to reduce their number of vendors. Because the more vendors they have, the more operational risk exposure they have. And operational risk is an area that regulatory authorities are increasing scrutiny of. And particularly, as large language models are emerging and more AI is being incorporated into solutions, the black box problem around lineage and provenance, like how does your model really work? Where does the data really come from? Can you trace that back? Becomes more of a challenge and is an additional risk. So there are headwinds for RegTech firms that are increasing. And I think you have to be able to service and focus on market segments, say in the fintech space, with smaller, more agile customers, where the procurement challenge is significantly lower as a first step to build your business. Easier to establish trust because you're dealing with more peer-like firms than you are dealing with firms with very complex procurement structures. So I strongly advise, pick your target market segment for your solution carefully. The second is really try to partner, because you'll be able to leverage off of that trust and credibility of perhaps more established players. And again, initially your partners might not necessarily be big. but you have to ladder it up. And that's a really important stage of developing your business because you have to be super capital efficient. So, by the way, just capital efficiency is incredibly important. Think of it as what is the increase in my startup value created by $1 or a rupee of investment. Okay, you want that to be as high as possible. That ROI as high as possible. So if you're super capital efficient, it means you've been able to create a lot of value in your business on relatively little capital. If you've made good headway in your business, but you've spent a huge amount of capital, you consumed a huge amount of capital, that is going to be a real challenge for you. Your capital, you'll be perceived as capital inefficient, right? So even if you haven't achieved as much as another firm that's raised a ton of capital, if you've achieved half as much, but you've done it on 1/5 of the amount of capital, you've been more capital efficient. And providing you can demonstrate that if you then had the capital and you could expand and scale with a replicable product to an identifiable repetitive user persona, right? A type of user, you will win. You will win. So it's very, very important that you ladder up that building, being very capital efficient, starting with smaller players with shorter procurement cycles. Because if you get caught in a 2-year procurement cycle and you're trying to service a large customer and you're trying to do something bespoke to them, because I described how all these compliant processes are a little bit different, they could burn through a ton of your capital. And that makes you capital inefficient. So your point about trust, your point about what a small team can do is really important in the current environment.
So Robert, I think he's also asking about like if it's a small organization and they're doing a startup, any particular piece they can pick up from the whole RegTech space as a whole solution? Any specific thing he can there? If you can just suggest 1 or 2 points which they can build so that they can that can be plugged into the whole RegTech solution. As you rightly said, obviously we should start with the small end companies to initially cater to, because it will be easy for them to get into that trust zone, and then constantly build upon it and reach out to much bigger companies.
Yeah, I think there's still, even though there's a lot of players in it, I think the challenges around a couple of different areas. One, probably in the space of anything to do with fraud, consumer protection, I think is a space where there's significant growing demand. I think it's probably less crowded than the AML space with anti-money laundering solutions. But I think if you can bring, so much is lost to fraud, and I think not just financially, but reputationally. I think consumer protection is kind of the downside of digital transformation in fintech, right? Because all of this is a double-edged sword. As fintech grows, it's so enabling, but it also introduces new areas of risk. And I think one of those areas of risk that's emerged is around consumer protection, fraud, et cetera. And that's a space where I think you could be pretty capital efficient and find a fintech market that would want to buy and license and partner around consumer fraud related, or just to call it consumer protection. But I do think of different types of fraud, and look at just the manifestation of different types of fraud that are emerging. I'd be looking at that space. I think that's really interesting. And I think it's particularly valuable also in emerging and developing economies, because the vulnerability around individuals that are suddenly part of the financial system because of fintech enablement, but are lacking financial literacy, for example, are really vulnerable. So that's a pretty big space to play with. It's also high value to supervisors, huh? Without question. They want to see, they're very concerned because that's all about trusting the financial system. I mean, if consumers really get burned, they start to reject technology adoption. So I think that's I think that's a really important area. I think that's one area. I think also another area around digital assets. I personally believe tokenization is going to be a really big thing. And the tokenization opportunity is maybe a little bit different because it's much more perhaps B2B where it's maybe even B2B2B where it's a little bit different because you're going to be dealing more with financial market infrastructure players. But I think there are certain frictions in the deployment of the infrastructure needed for actually being able to enable tokenization. But I think there's so much value perceived in tokenization by fund managers and by large financial institutions that's going to be quite transformational. And so there's a lot of uncertainty. There's going to be a lot of innovation in that space.
Great, Bob. I think any other question, if you can, anybody who can just put up the question, and because we are reaching to the timeline. Yeah. So thank you, Bob, for your insightful presentation on RegTech and SupTech. Now I can clearly distinguish them both. Many of us have been using it interchangeably, but we appreciate your expertise and your practical examples you have shared, which will undoubtedly inspire our approach towards regulatory changes. So thank you all participants. Let's continue to embrace these advancements and we navigate the evolving landscape of finance. Thank you once again, Bob, and thank you for all joining us. We have another session which is scheduled. I think we will share you the link on the WhatsApp group. But thank you, Robert. Thanks for taking out time. Thank you.
Thanks, everyone. Bye-bye.
Bye-bye.